Well, thank you for joining us. We appreciate that you're coming here to watch this video here that we have today. What we're hoping to talk to today is just addressing some of the calls that we're getting regarding what to do before the July 15th deadline. It's silly and it feels weird that we're saying July 15th versus April 15th. Usually every year you hear us jumping up and down on things that we need to get done before the April 15th deadline. But now that we have a July 15th one, do things change? Are they the same? Do we have more time? Do we not have more time? It's a common question that we're getting, and we want to just address some of those questions. In general, the best way that I could tell you is if you normally hear us harp on something as an April 15th deadline, it's now just got moved to the July 15th deadline. So all the age-old adage things that like an HSA or an IRA, those contributions, those are deadlines, normally are April 15th. This year they're due July 15th. So the short answer is yes, you can still do those for your July 15th, and we strongly recommend that you do. We understand that cash may be tight right now just because of everything that you're going on. But the flip side is maybe you have a little bit of extra dollars, maybe the stimulus dollars, or maybe you're getting a bonus here right in June because of maybe the PPP loans coming through, or extra dollars that you might have earned. We definitely want to think about making those contributions. We still have time. We can make them before the July 15th deadline. It's crazy that we're in the middle of the summer and we're talking about making contributions for the 2019 tax year. But yes, we still have this free time and this availability to do it. And we have the ability to look back and see, does it make sense? Many of you maybe have already done it. We took advantage of the down market to put dollars into your IRA. That's great. It is still allowed. Let us know that we can do that. So some of the things that you absolutely want to make sure that you've thought about is HSA, that's a health savings account. If you're eligible for doing those, we can maximize those out. We have until July 15th for that. IRA contributions, so there's both a traditional and a Roth. Both of those we could use before July 15th. So let us know, let's talk through, let's see if we can make those contributions before that deadline. The biggest one that we're hearing and what we're having to go back and think about, and I challenge you to think about here, is estimates for 2020. Those are due, normally your first quarter estimate is due April 15th and your second quarter estimate is due June 15th. Well, this year for 2020, both your first quarter and your second quarter estimate got bumped and are also now due the July 15th as well. And people are asking, should I pay that estimate? Should I not? Hopefully you've talked with us about this and we've kind of individually talked through and analyzed, do we need to make those estimates or not? If you haven't, please give us a call. We still have some time. That's why we're doing this video today, so that way we have some time yet that if we haven't talked about it, we can at least go through and look at your individual circumstance to determine whether or not you should or you shouldn't make those estimates. But when in doubt, you should plan on making those estimates. If we don't have a chance to talk, or if you're wondering back and forth whether or not there's going to be an extension or not, there may be. They may avoid penalties because of the COVID-19, but I wouldn't plan on it. As of right now, there are not an extension on the penalties. In fact, this extension is already an extended deadline. So it was due April 15th and June 15th that are now, they've extended July 15th. So this is the deadline. And so if you think that you owe an estimate, you should plan on doing that on July 15th. Now, that still steps back and asks, should we? Just because we printed them out, do we have to? Well, one of the first things I'm walking through clients that we're talking through is to remind you that the first quarter was actually fairly good for many businesses. It was before we even knew about the COVID-19. It seems like a lifetime ago, but January 1st through middle of March, we had no idea about COVID-19. And so many saw very good first quarters that may prompt to actually have estimates. So if you're a business or you're an individual that pays estimates based on actual results, your actual first quarter may have actually been quite good, which would necessitate having a first quarter estimate here due this July 15th. Now, second quarter, we may find that it's down. The stocks may be down, your investments may be down, or your business in general may have been down, and therefore it may seem like we don't have an estimate. Well, that may be the case. But you also may find that things are back up. So let's look at a couple different scenarios. So yes, the stock market went down, but now it's back up again. And so maybe we can't rely on the fact that we're not going to have capital gains this year, because they may be back. We may find them to be there. You may find that even though your income is down, your gross income, because you have less receipts, but you may find that you're maybe more profitable because you're able to cut costs, and you may have had that following from your clients that helped you through this time. That yes, your revenues are down, but your expenses are down as well, meaning you're more profitable. And lastly, you may find that if you received the PPP loan, that PPP, that in and of itself is not taxable. However, the proceeds that you use the PPP for, generally wages, you don't get to deduct that either. So while the grant itself is not taxable, you don't get to deduct the wages that you normally do. Now, if you had no revenue at all, and therefore you were maintaining fixed costs here, you may be in an okay spot. But if you find that you maintained revenue during this period, and all of a sudden you have this the PPP proceeds helping you pay for some of these salaries, you may find actually you are higher taxable than what you were before, which would again necessitate having to have a second quarter estimate here. The overarching thing that you need to hear is, if we haven't communicated and we haven't talked with you individually as to whether or not you need to pay your estimates, please call us. We should assume that you do, and so we want to have that discussion. And if there's a reason we're not making those payments, that you consciously know why you're not paying them, so that way we can avoid any penalties or interest that come later, because it is still going to be due. And then lastly, as we look at it, you may have your estimates based on what's called a safe harbor, which means it's based off of 2019. You may find that with 2020 being so up and down that we don't know where we're going to end up at, you may find it's a better result or better return in 2020 than it was in 2019. And because we have you safe harbored, which means that you're paying estimates based on what you paid in 19, that you have to make even payments throughout the year. Well, that would mean that your first and second quarter are all due July 15th. And so that would necessitate having your first and second quarter payment due here. So the moral of that story is, unless we've talked that says you should not make your estimates, you should plan on making your estimates here on July 15th. So consider this a public service announcement. Consider this some things to think about here before the July 15th, that we have a little bit of time. But give us a call. Let us talk through your specific situation to make sure maybe we don't need to make one. But in general, you should assume you should. So thank you for listening in. Little bit of a precursor here for next week. We're hoping to have a guest in to kind of talk through some strategies or some things that you may think about if the COVID-19 has made you think about maybe we want to do an early retirement. We're actually seeing that on several individuals that they just don't want to go back, whether it's they're enjoying the time that they've spent with family, or maybe just things have changed so much at their workplace that they don't like it, or maybe you're saying, you know what, I just don't want to deal with all these new requirements, that now may be a time to do some retirement and early retirement planning. So we're going to talk about some of those strategies and some things to think about, that if you want to retire by the end of 2020, that you need to have in place. So that's a little bit of a precursor for next week. We'd love to have you join us for that as well. So thank you for tuning in.